Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com. And these are the market positions for October the 26th, 2010. Now, our first position for tonight is going to be in the foreign exchange market, specifically the US-Japan currency pair. We've got some very choppy trade to start the week, to finish off last week, but looking at things here, the US-Japan continues to move lower. We've had an intraday low today in the 80.40 level. We've closed at 80.82. That's not an all-time low here in the last multiple years. I think 1995 was the last time we've been in these kind of levels, but again, everything is consistently moving lower. We can see here the predicted MACD has come close to hitting the trigger and moved away from it and is now heading lower. Our predicted true strength indicator, we have no crossover on this trigger. It is heavily oversold. I don't dispute that, but it continues to move lower. And in actual fact, it's been oversold. As US-Japan has been moving lower, you can see that we've been oversold for essentially months, and it still continues to move lower for very good technical and fundamental reasons. So for now, we're going to go with that. We've got our key levels of support or resistance, excuse me, that we want to identify here: 82.03, 81.39, and 81.09 with a close of 80.82. So basically our pivot resistance is all the way up at the 82.03 level. That's only 100 pips. So the risk to reward on this trade, I think, is fairly decent. We're going to be looking at the potentially the 8-day predicted moving average to get into this trade, but first we're going to go into the daily report, review the daily report, see what we have here for potential highs and low for tomorrow. Now, again, of importance here, we can see that we've closed Friday at 81.39, but then today we've closed at 80.82. We've also hit this intraday low again of the 80.40 level. Again, still very bearish here. Predict neural index has gone from positive to negative. That's good. We've got a high tomorrow, 81, or tonight possibly 81.29, a low 80.37. So we're looking for about a 100 pip move. We're going to have our stops above the 18-day predicted moving average in about the 82.20 area. The fear with this trade is the fear that they're putting into the market of intervention. Well, you know, the reality is they intervened right here with this long candlestick, and it had virtually no effect. All it seemed to do was agitate the market, and it gave everybody the opportunity at this level to set shorts to get a better position on their dollar shorts. Now, essentially across the board, I really don't see any change from the Forex weekly outlook. The bias is to the upside on the pound dollar, on euro US. You know, people are saying, well, Euro US is overvalued. I don't really see that. So I think we have plenty of room to extend. But our focus for tomorrow, we're going to try and stay with the trend here. The dollar yen continues to move lower. 81.29, between 81, anywhere between, really 81.29 is our predicted high. So that will be the entry point for your more aggressive traders. Your less aggressive traders, anywhere between 81.39 and 82 is a premium short. Barring any verbal intervention or things of that nature, that's where we would look to get into that position. Now our second position is going to be in the light sweet crude contracts. Again, the gold trade's a little bit crowded for me right now. The crude oil is you know, we've had a little bit of a move to the downside last week. The 3-day predicted moving average crossed over the 8, but could not cross the 18-day predicted moving average. You can see here that off this base just above the 79 level, I've actually drawn this candlestick, and I have a bit of a small rising trend line forming on this, and we've had a good close again today at 82.52. So this has my attention again for tomorrow. So this will be our second position. What I want to do is identify some critical levels, of this case support. We've closed at 82.52. Our key level of support, 81.06, 81.78, and 81.98. Now, what we also want to do with this is have a look and see what's happening with the crossovers. Now, again, the signal is somewhat mixed here on the light sweet crude, but our triple EMA cross has not confirmed a reversal on the crude contracts. Short-term crossover here, we can see that it's crossed back to the upside. We're going to go in here, have a look at the medium-term crossover. Medium-term crossover is also just crossing the trigger again to the upside, and you can see the base of this wick, the low for the day, is sitting right on that trend line support, so that everything looks good here. And our long-term crossover from vantage point is basically sitting flat with a clearly an upside biased. So with everything said there, the light sweet crude contracts again have my attention at this level. I think the dollar is going to continue to weaken. That is likely what we're going to see. Now looking at that, what we want to do here, excuse me, before we go into the dollar index, we want to actually look at this and get our trade for tomorrow. So all our stops are going to be below that 8106 level. And now what we're going to do is fine tune that entry point. We're going to use the predicted high and predicted low for tomorrow to again set those positions. So let's go down here and have a look. We've got 8167 as the low, 83.39 is the high. Neural index is positive. We can see that our short and medium term crossovers have turned back positive again. The long-term predicted differences again are weakening, showing a positive divergence there. So everything looks good. So 81.67 is our predicted low from vantage point for the daily range. That coincides. We've got 81.98 is the 3-day predicted moving average, and 81.78 is the 8-day. So we've got some good support sitting down in that area. So 81.67 looks like where we're going to be watching that area to get into our buy position. Now, another factor here that affects both the crude oil and even the U.S.-Japan trade to some degree is the dollar index. You can see that last week we've had this trying to break through the 18-day predicted moving average from vantage point. It was unsuccessful in doing that. Again, we've crossed up here. We've hit it again just a couple of days ago, and we've now closed the week at 77.30. Now, this puts any Euro-US long or Euro-US short trade at a great deal of risk. Now, I know there's a number of market analysts, participants that are all saying the Euro's capped out here at the 140. We're going to start moving lower. That doesn't appear to be the case. Now, what you want to point out, what I want to point out here is we've had this corrective move last week. Our major resistance areas have successfully held. This tells me that the dollar index will start moving back towards this area in and around this 74 level. That may not happen overnight. I don't believe that the Euro US is going to have any significant downward pressure. I believe the 138 level will hold, and any move towards that area is a good buying opportunity while the US dollar makes a slow and gradual descent back down towards that 74 level. So if we're not looking at multiple markets, it's very difficult to understand how these other markets can affect your target markets, whether it be commodities or currencies. So those are the market positions for October the 26th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.